Well, retail sales. Retail sales were the big number of the week, and we just got them. And swing and a miss. I was wrong again. I expected retail sales to come in soft. I expected retail sales just might have a negative month-on-month number. And lo and behold, I was wrong. Retail sales surprised to the upside. We'll go through the numbers. We'll go through some categories. We'll talk about it. Is this a sign that the recession is once again delayed? Is it the soft landing? Is it the no landing? There is a lot of things going on, folks. Yes, I know we record the daily financial news 5 days a week, but usually on Thursdays, I have to go at 7 a.m. because one of our millionaires needs to be interviewed at 7:30. So Thursdays, I do make an exception. We go at 7 a.m. I thank you for being here. I thank you for watching later because a lot of you anticipate these at 7:30. So thank you. So let's talk about retail sales. First and foremost, last month, 0.1. Expectations were for it to get stronger to 0.3. Actually came in at 0.4. With retail sales, just like CPI that has headline and core, retail sales has a second category called X autos. Basically, autos are a large swing in the retail sales category, so they often also create X auto. X auto was up 0.5, even stronger, and the expectations were 0.1. So again, folks, there's lots of folks out there, doom and gloom. You have heard me talk about a rolling recession being the category. You've heard me talk about Q4 potentially being a negative GDP just because I think the consumers are pulling back. Well, as of this reading, which is for September, they did not. Now, we did have a couple of large hurricanes coming to the East Coast, or at least one that was named at that point. So maybe some of this was pulled forward, but I don't think so. I don't think you get this surprise just on some pre-buying or stocking for hurricanes. But it is interesting to look at the non-seasonally adjusted. The numbers I just gave you, 0.4 and 0.5 up, were seasonally adjusted, which are usually the ones reported. However, if you go to the raw data, which I did this morning, the non-seasonally adjusted was flat. Was just flat, right? Basically the same number from last year. So that's also interesting to look at. When you dig inside the retail sales numbers, there are some categories that were positive and some were negative. For example, on the positive side, miscellaneous retail was up 4%. Clothing was up 1.5%, and bars and restaurants were up 1%. So we are still going out to eat. We are shopping. Maybe that's back to school shopping. I don't know. But retail sales were up in those categories. Now, where were they down? Well, again, they went down in gas. That's mainly because gas prices got cheaper. But yes, gas was down 1.6. Appliances. Yes, this is capital goods down 3.3%, so negative 3.3, and furniture was down 1.4%. So from where I sit, this really looks like big purchases, aka appliance, furniture, down, aka cheap or experience, clothing, and restaurants up. So again, I do believe we are seeing the pullback in larger expenditures. We are seeing a pullback in things that are financed, right? There are people that finance furniture and appliances. Also, if you go back to retail sales, X auto, it was stronger than the headline reading, which again, autos are often financed. So again, I think we are seeing the impact of consumers kind of move away from debt, certainly move away from new debt, which again, I think may be a sign of a slowing in Q4. But again, I like to admit when I am wrong. And I was wrong. I thought retail sales would be down and could possibly be negative. So there is that for you. So again, we'll keep going, but we want to congratulate some people. First and foremost, this is a golden ticket, a first deal that I failed to send out the first time. So she sent me a note. I'm going to say, and Jean, congratulations on your golden ticket. I apologize for missing it the first time. Here it is for you. It will go out today. Congratulations. Ronald, I don't know if you guys know this. I haven't sent many of these out. These are called purple tickets. And the reason I created these is I think there's a lot of folks that are stuck in kind of analysis paralysis. They just keep on. And what I want you to do is that if that's you, I want you to write your first great disrespectful offer. I don't care how bad it is. I don't care if it's listed at 250 and you write it at 150. I want you to understand if you do the work and you know your numbers and you could back up your 150 price, write the offer. Why? Because I want you to know you're not going to die. You're not going to die when the agents laugh at you. You're not going to die when the seller says, no, thank you. Some of you need encouragement. You need to know that there's somebody out there that supports you, and I am that guy. Write your disrespectful offer. We expect to be told no. So if this is you, I want to send you a purple ticket, and we're sending a purple ticket to Ronald. Ronald's been doing the work. He finally wrote his disrespectful offer. It went nowhere, but who cares? He did the work, wrote the offer. So Ronald, your purple card is coming. And of course, we'll congratulate Matthew one more time. Number 11 going out to Matthew. Going to be sending these 3 cards out this morning. So again, golden tickets, purple cards, black cards. We do it all here because we want to celebrate you for doing the work. So congratulations, everybody. How about this? What about the best small towns? Yes, definitely right. Wealth building. If you are stuck in analysis paralysis, please find your accountability group. We have 3 accountability groups on school that maybe fit your schedule. You can go on Sunday. You could go on Wednesday. Or if you are an early bird like me, you could go Monday morning. Max, Gerald, or Frank are there to support. We got you. We can help you. We got lots of people in your shoes. Join school, a measly 67 cents a day to get around people that are doing the work and help you. I don't know why anybody would not do that. Let's go back to this list. Wealth Hub. Wealth Hub produced a top 10 list of small cities. Top 10 list of small cities defined as 25,000 to 100,000 people. It looked at affordability, economic health, education, quality of life, and safety. What I'm going to give you is the top 5. If you want the top 10, just go Google Wallet Hub top 10 list small cities. I'm sure it will come up. Number 5, Appleton, Wisconsin. Number 4, Fisher, Indiana. Number 3, Lexington, Massachusetts. Number 2, and the second from Wisconsin, Brookfield. And number 1, the second from Indiana, Carmel, Indiana. So again, folks, those are the top 5 small cities. Let me know. Anybody that watches this, invest in, live in, it can validate this list. Is Carmel, Brookfield, Lexington, Fisher, Appleton, are these quality small cities? I'd just love to know. Was this list bought and paid for? Was it true analysis? You just never know. Guys, I don't know if you remember my story, but one of the stocks that got me, or actually helped me turn $7,000 into 200 was Cisco Systems. Ultimately, it went against me. But you've heard me talk about what I believe NVIDIA and Cisco are very similar. When you look at kind of what's going on, building the internet versus building the backbone of AI. And I saw a chart the other day where Cisco Systems, at their peak, the market cap of Cisco was 5.5% of US GDP. Think about that. One company's total market cap was 1/20th the size of the US GDP. Well, NVIDIA just said, hold my beer. NVIDIA, as of yesterday, it might have been the day before, was not 5.5%. It was 11.7%. It is a doubling. So AI is clearly running and gunning. NVIDIA's 11.7% of US GDP. And let's not forget, GDP is bigger today than it was back in 2001, 2002, whenever Cisco peaked. So pretty wild to think about. Let's talk about some people that joined school yesterday. We had 2 folks, Harris and Jack. Again, remember, by joining school, You get in part of these communities, accountability groups. Remember, level 2, you got to introduce yourself. You got to interact. Once you do that, you get to level 2. It unlocks 6 hours of creative financing. And if you take the time to get to level 3, you get a huge bonus. You get a 10-week boot camp that was sold for $1,000. So go ahead and take a listen to that. Folks, we were also waiting for the weekly unemployment claims. We saw a big spike last week. It was concerning. We had some hurricanes. We expected, or at least I expected, the weekly claims to go up or at least hold steady at about 260. Again, weekly claims came in much better than expected. Weekly claims came in at 241K. Last week was 260. So not quite back to the baseline of 230, but certainly trending that direction. So we are not currently on an elevator ride higher with weekly unemployment claims. We will obviously continue to monitor this, but it is getting interesting. Amazon is investing in nuclear power. Microsoft restarting 3 Mile Island. Lots of people are looking to get cheaper and cheaper energy to power these data centers for artificial intelligence. I think this is a trend that we will see moving forward. When does Google or Facebook or any of these other folks do something similar? Wanted to summarize bank earnings. You know that we talk about bank earnings a lot. We basically got the big players at this point. They did much better than expected. As I recall, all of them beat earnings, beat revenue. I believe all of them had increased reserves for bad debt, which will make future quarters look okay. At the end of the day, delinquencies are up, but not yet alarming. And of course, these banks have each of them put billions of dollars away to smooth out any future losses from bad debt. I do want to highlight a very important video that comes out at 11 a.m. Comes out at 11 a.m. this morning. It was a student from school. This student is very unique. This student has been investing in real estate investing since 1973. 1973. This young man is now 80 years old. He's been investing for over 50 years. Why is this story so important to you, or more important to me? And I hope it's important to you. Well, you've heard me talk endlessly about the desire to get to 4 rental properties. I believe most of you would have a dramatically better retirement if all you ever did was get to 4. My big goal when I started in 2001 was not 100, was not 50, was not 10. It was 4. I could not think bigger than 4. Well, Bill, again, starting in 1973, 50 years, 51 years, made 5 moves. 5. Nothing ever bigger than a duplex. Again, in Bill's story, you were hearing him talk about not making a lot of money. He had a government job. He only made 5 moves. He took a decade off between his second and third move, if memory serves. He always made a point of living below his means. He made a point of paying off or having no debt on his properties. And as he shared in the discussion, those 5 moves, only 5 moves, allowed him to have a much better and a much more secure retirement. Folks, this game is not hard. This game does start slow, but it is not hard. Live below your means, make a move every couple of years, pay them off when you get close to retirement, and have a better retirement. Now, again, as you will see in the video, Bill is 80 years old. I think it's, do me a favor. A lot of you are a part of my school community. Please, after you watch it, send Bill a note. He's not great with technology. He was very nervous using Zoom. It's not technology. It's not his thing. But do me a favor. Send him a message. You can look him up. Just look up Bill S. Bill S. He's the only one there. Send him a message. It was such a fun conversation for me because, as you'll see at the end, I'm like, Bill, you're the story that I'm trying to get 20 and 30 and 40-year-olds to understand. If you only made 4 or 5 moves, you will nearly guarantee a better retirement. And that's what I want for you. If you choose to go to 10, 20, whatever, you want to be the lazy landlord at 18, awesome. But for some of you, you just need 4. Just get to 4. You love your job. You're going to work there till you're 60, whatever. Great. Get 4. Listen to Bill talk. He says if he didn't have his real estate, he'd be in real big trouble. He couldn't afford his rent. Think about that. Think about that. Social Security, little pension, couldn't allow him to live. It's his rentals that allow him to have a good life. All righty, folks, we are about 100 days out from the Vegas event. Frankly, you need to start buying your tickets. You need to start booking airfare and hotels. You can find the agenda on Eventbrite. I would hate for you to miss it. I would hate for you to overpay for airfare or hotels. You know, we're going 2 days. We're going 12 hours day 1. We're feeding you 3 times, lunch and dinner, 6 hours of networking in the VIP section. We got some surprise goodies coming. Buy your tickets now. Let's sell this thing out. I think we're still at 96 tickets sold. But yes, we're nearly 100 days out. It's time to buy tickets. It's time to get there. And then lastly, I did a survey. Again, as you guys know, I'm not a huge user of YouTube. I just record and publish. I don't edit, do anything like that. Somebody made a suggestion yesterday I should do a survey. And I did. I didn't know it was easy. So I did a survey. Thank you for participating. What was that survey? If you remember in the daily financial news, I asked a question. Who is better off today than 4 years ago? Now, the survey is still out there. You can feel free to take it, leave some comments. But this is what I took away from that survey thus far. 100% of my audience, 100% of my audience is doing better today on a wealth or net worth scale. Now, of course, that doesn't surprise me. We are a channel that talks about assets, so it doesn't surprise me that we had such a strong performance. But there's more to these numbers. 60%, 60 of you talked about significantly higher wages. 50% or half of you did highlight that the daily cost of living is much, much higher and is somewhat of a struggle. And 40% of you did highlight it is harder to make ends meet, right? The month is stretched when it comes. So again, it doesn't surprise me that we are a channel that leans on assets. And of course, assets, because inflation's a feature, not a bug, are doing really well. But we are not immune. Everyone, you, me, everyone watching this is impacted by inflation. Inflation is a tax on everyone. And we are not immune. 40% of us, 4 out of 10, have highlighted that, yes, it is tough to make ends meet. So again, a lot of stuff going on there. It was very interesting to do surveys. I need to do more surveys and really figure out what's going on in the community. Thank you for the suggestion. I didn't know you could do that. And then lastly, we will talk about the chief equity strategist of Stifel. His name is Barry Bannister. Barry Bannister does not have a good feeling about stocks in 2025. Barry Bannister is saying that he expects stocks to be down 26%. 26%. That'll get your attention. So again, I do not know Barry Bannister. It's the first article I remember reading from him. I do not know if he's a traditional bear or doomer. I don't know. But yes, I thought it was an interesting discussion. Basically, Barry's thought on a downward 26% is earnings will come in and multiples will collapse, which again is very logical. If you believe the earnings of S&P 500 will be down 10, 12, 13%, you also think we are going to see multiple contraction from, say, 21 to 17. It's not hard. It's not hard to have a 26% drop in the stock market. Again, folks, I want you to have an amazing day. Don't forget to do the work. Smile. Realize that the weekend is almost here. Do me a favor. Start buying your tickets for our Vegas event. Let's sell this thing out. And don't forget, 67 cents a day to join school, have accountability groups, get around nearly 300 other people going in a positive direction. And of course, Monday morning, 8 a.m., I will be going live inside school to answer any and all questions. Guys, gals, have an amazing day. Later.